Hey there, welcome to the channel. So I haven't done a stock update for a little bit, so I'm going to do one. I kind of, I just kind of do it when I look at it, and sometimes I'm kind of busy with work and other things, so I don't really look at it. So I'm not like a hyper kind of like, trading all the time kind of a person. I just basically have a very, stable position in, just the general wide index of the, S&P 500, which I just kind of, do some trading around that. So um, we're just gonna here. Let's go through the kind of what's going on. So basically, here we are, the weekly chart. I like to look at the big picture. Uptrend intact. That's all you can say over here. Uptrend intact. This week was an up week. So really, nothing really changed. Just a really really study, just continuing ramp up. I have to look at the consumer staples. This one had pulled back worse last week and recovered a little, but so, I had some of that as sort of a side position, and I had gotten rid of it because I just didn't really want to, it to underperform. But overall, I mean, it's still in an uptrend. It's just a little more volatile in terms of like it'll, run up here, come down, pull back, but still, you can draw a trend line there. It's obviously trending. Um, and then let's look at like the large cap tech and the Qs. This broke out to an all-time high. Now, see, the thing here with the Qs are, you know, this one here is you had like a consolidation here. You can kind of see. So this is like a breakout. Now, I believe, and we'll check again, but the S&P also went to an all-time high, and we'll check on the Dow Jones too. But this one here, the other one's more like continual uptrend, but this particular one, the Qs, it's there's an uptrend intact, but what we had is a consolidation here. So obviously you have some kind of a general uptrend. You can see here, you can draw different trend lines trying to see like where it is, but you can see that it basically had flattened. You came up here, and then here you got a little bit higher, but not much. So you had this kind of resistance build up, and this is sort of like an ascending triangle type of thing. So in this ascending triangle, what's going on is that you have a situation where, and I don't want that color. How about this color, where, you put in, your tops are pretty much the same. Yes, this one over here was a little bit higher than the one over here, but that's fine. And then you broke out here. But as that was forming, you can see that you had a low here, and then you have another low here, and it's kind of, and then you kind of can hook it with this as a trend line. You can see that it's kind of compressing up. You're getting higher lows, but the highs are staying pretty much the same. And then it pushes up to a point where it breaks out. So you can imagine, an equal, you have some patterns that are more of an equal selling, moving back between equal selling and buying pressure. And this is more of a pattern. You can see that it's building up with more buying pressure against the selling pressure. So you get up to this high, there's some selling pressure, knocks it down, right? Get up to this high, selling pressure knocks it down. But the selling pressure is failed to knock it back below this low over here, right? So over here, it didn't break this low here. So what you're seeing is you kind of see this ascending type triangle, and it's sort of a bullish, it's a consolidation kind of bullish pattern. So we kind of see that, that's kind of what went on there with that. So, I mean, everything's an uptrend. So let's just look at the Dow Jones Industrial, just see what happened there. Dow Jones, was kind of like XLP in that, it had a bigger correction last week, but, it gained almost all of it back up. So, it is what it is. So, I mean, just, the trend is intact. And the other thing too, to kind of keep in mind, look at this thing, you don't have anything setting up. It doesn't look to me like there's anything setting up to where, you have a potential top coming in. So I know sometimes people are like top this, top that, but I just don't see it. I mean, the market can be incredibly, there's several things. First of all, yeah, this happened over here. We had the cerveza sickness, and they just shut down the economy. I mean, I remember it was so dumb. Not dumb, but the thing was, I remember like I go to this place called Fiesta Island in San Diego, and it's this place you can drive on, and it's just an island in part of the San Diego Bay. and it's huge. It's not huge, but I mean, it's large in terms of, it's like a 5 mile round trip where you can just pull off anywhere you want. They have fire pits, and it's like a sandy, not totally sandy. It's not like a nice white sand beach, but it's a place where you can just go hang out right on the water, that kind of a thing. And I remember they were just closing that down. It was like not okay. So basically they shut the whole economy down. So everything just got boop. These are limit down days in here and the whole deal. And then they just kind of like, pressed it out of there with all the things. So the point is, what happened here is like there was no sign of a top, and yet it imploded. Now, you can't predict that, so that's the thing. So you have to, in a way, you have to ignore that. You have to. You can't. There's just no way that you can predict that. They're going to just shut down the economy because of a pandemic. There's no way. So basically, what you have is you have a situation here where, hey, we had a little correction last week. Didn't even get through the major averages. I know this one, the blue dotted, is the 50, but look, you're really looking at the 30-week moving average with 150-day, or the 200-day moving average. That's the kind of stuff that matters. So all you have is another one of these guys, and these are kind of like little railroad tracks. And so I think, so it's like, okay, yeah, it sold off, but it like recovered almost the whole thing, and the uptrend's intact. So that's really just the big picture, is that, hey man, the uptrend's intact. So there's nothing to be worrying about. And then I think if you wanted to look at where would you start being concerned, you'd have to go back to the big, the last, crashes that we actually had. And what I want to say, max weekly. So, okay. So yeah, so if you wanted to go back and say, well, let's go to, the last, the 08 crash, right? So we can just go back into that period there. Bring this up to here. Is this 90? Well, this is the 2000 crash. Let's go to the other one. 08, what happened there? This is 2003. That's still the tech crash. Yeah, I want to go kind of this area. Yeah, so we want to look at this area. So, let's try, this was like the financial crisis here. It's so funny because now that you're trading in, where our charts are way up over here at prices more than 2 times what they are at this time. You kind of put it in perspective, but remember, these were all-time highs at this time. And so you had these big things like, yes, there was a solid uptrend at this time, but you can see that it broke, and then it came back up, and these were happening on the weekly charts. And so now, even though, maybe at a point in here, you're like, okay, you're at 105 and you had made it just for a moment to 120. So that's a significant correction. But the thing is, you can see that it's not recovering. You can see that you had a situation where, yeah, like back in here, you had nothing, right? You had no problem. You just had, okay, it came down to moving averages, everything's cool. But then it got a little hyperbolic here, right? So it kind of got a little crazy and basically unsustainable. And that's sort of not happening right now. Sort of like if you look at the S&P 500, it's not that unsustainable rate. Literally, that's why I know people have the charts and they zoom in and all this, and I get that, but I like to kind of have consistent axes on the charts, because it kind of gives you that, like, if you're just zooming in, that's fine. But the problem is, you want to really look at the slope. This type of a slope is a sustainable kind of slope that can go on for quite a while. But, a slope like this can't go on. Like right here, yeah, this slope can't last very long. So what happens, it comes in, pops out, and then it either has to go sideways for a while before it can start going up at a more reasonable slope. And so that's my point. And then, so what happened back here is you had these kind of, like, I've pointed this out before, you need these kind of pullbacks and corrections of like greater than 15%. And if you look at these, you'll see that they're, 10 to 15% moves. And that's what you need to cause enough damage for a market to top out. So that's what you need, right? Now, do we have that right now in the S&P 500? And the answer is clearly no. Now, what you can say, so the answer is no. But what you could say, and you could say, is that, you're going back in S&P, you had more, like, okay, I get it. I'm cutting that off, but you have more reasonable trend, more reasonable slopes to your line, you know, and obviously I'm cutting that. I get that. So right now we're in sort of, actually, it's sort of a very unstable kind of, well, it's just, it's a very rapid, it's a very steep slope to that line. So the question is that, can that be stable like that? You know, I don't really know. So let's just go back to a regular weekly. Yeah, I mean, it's really hard to say, but going back, the big picture is like these pullbacks are very small. You know, for you to kind of get to a top, it's a process that has to build up over time. And so for that to happen, you would need to see something like, oh, you get a pullback that's like something like 15%. And then, you know, and then from there, like, okay, maybe it kind of recovers all the way eventually. Maybe it goes higher a little bit and then it comes back. And so you need something of some kind of a 15 to 20% range to kind of set up enough damage. Right now, it's just not there. So it seems very unlikely that, you know, there's kind of worry of a crash and that kind of stuff. So I wouldn't, you know, worry about it. Not financial advice, just from my point of view, I'm not really worrying about it. And my biggest problem right now is trying to figure out how to hedge. I mean, I don't have much of a hedge on right now, and I don't know what to do about that. So let's go to the yields here. And I wanted to look, so now weekly chart, we're going kind of big picture here on the 10-year treasury yield. You know, there's been some relief in the markets here because you see that, you know, treasury yields had put in this bottom here and, you know, basically spike low, and you have this bottom, and then, you know, it kind of created this W, and we broke out above it on the yield. And this created some consternation because, you know, you had rates going up significantly. So basically, you know, this point here, 10 is, it's a 10th, right? So that's 1%. So right now we're at like 1.4, 1.5%. But there's something I want to point out here is I know that like a lot of people are kind of feeling that, you know, hey, you know, it was this price rise here that was, you know, caused all this, you know, kind of market pullback and correction and concerns that had happened, right? And so the, you know, the feeling is by many that, okay, that's behind us. It's okay now because, you know, our yields are coming back off, and they've been in this trend. But what I really want to point out is like, this is a flag pattern. So this is not a, you know, you can look up the flag pattern, but this is not necessarily like a topping pattern. So here we have this big boom channeling kind of situation here. And we came all the way up to into this zone where, you know, previously we're back here, and, you know, we came up into resistance, and we hit the resistance, and we're starting to pull back on the yields, right? So inverse the bonds. So the bonds are starting to go back up in price, right? So my only point that I want to point out here is that this is a flag, and it's more often a continuation pattern. Could it be like, okay, it's going to reverse and keep going all the way back down to the here, so that bond prices keep going up, yields keep going down, because the concern is inflation? Well, right now, from a technical point of view, this is just what? Right? What really is this? Well, it's a flag pattern. It's often a continuation pattern. And so it's actually very bullish that the fact that the yields have gone down. So the expectation would be at some point from a technical analysis, which is not, you can't use it to predict, but it's just like, hey, there's a certain percentage of the times, you know, there's a reason they named the pattern, because it's like, hey, we observe these flags. We observe, like, they're not observing that this is like a top, a double top, head and shoulders top, or some other type of topping pattern. There's a reason they observe it as a flag, because, hey, these flags occur and they end up becoming very often consolidations for a continued move higher. And so and notice how it's coming down into the moving average. Red line is like the more important moving averages here, you know. So that's going to be longer term. It's like the 30-week, which is 150-day moving average, which is like, it's going to end, you know, between the 150, 200-day moving average. You know, that's where you're going to find that support potentially. And that's where you're going to conversely find the resistance on the treasury. So now what is possible, and you know, we'll see what happens. And I'm not predicting this, but, you know, in many charts, you get this kind of flagging, and it's possible that, you know, you see here, you go into the flagpole, you get some kind of a quick rise up, followed by more consolidation. you know. It's entirely possible. So that's the only thing that I wanted to point out about the yields is like, hey, you know, it's possible that the party that we're under, we're like, hey, everyone's really happy because, you know, yields are coming off and and that means inflation is going to lowering. Well, maybe not. And conversely, you know, here we go with, you know, now we're looking at the TLT. So 20 year, right? 20 year, but it's just a more popular one. So let's go with it. 10 year, 20 year, not that much of a difference in the scheme. But, you know, conversely, it's inverse. And so you see that you have the uptrend form. You see how the double bottom came in. But remember, like the prices. So now we're looking at the pricing of bonds are now hitting into the moving average, the red. So now it's hitting resistance. And you can see that the prices of the bonds did pull back a little bit last week. So it is hitting that resistance. It is, you know, observing that resistance. And then right up in this range, you know, 152, this area, you know, you got more resistance. I mean, obviously we have resistance all through here. So, you know, is this thing gonna, you know, for rates to continue to go down? I mean, they probably don't have to, right? Obviously, if the rates just kind of flutter around in some kind of range and don't get out to, you know, either extreme, that's probably like the market would be probably as happy as can be. Okay, so that's it for that one. So then just look at some ones that, this is one that I found. And so look at, I did, this is just me, not financial advice. I bought some UNG. So let me go to a weekly chart on UNG, what's going on here. You can see, look at this thing. Look at this thing. This natural gas has been like in the crapper for years. Like you can go out for like a long time. Look at, I mean, it's just got like in this particular fund, the UNG, the ETF, they've reverse split like crazy. It's this, I remember back in the day, 07, 08, you know, this was, natural gas was going crazy and stuff. And now it's just, of course, it's just dog meat. It's been dog meat for years. And so now as we zoom it, like, okay, let's try to take that big chunk out and just kind of show a bigger picture of, yeah, I mean, it's just constantly falling. You know, the price of natural gas has been, at least indicated by this, has been falling. And so you had this big downtrend. And so now if we go to the weekly, so now we kind of zoom in more recently, hey, look, you got this kind of double bottom stuff happening. You have resistance point here. So basically, you know, yeah, put in a low. It's interesting too, because you had like a low here and then it kind of like, see what'll happen is it starts piercing, like, okay, in a lot of time here, it started piercing the moving average to the upside, right? In this range. And then, you know, now you get this higher low. And then this kind of came to the pivot point. And this is on the weekly chart, it came to the pivot point, because right in this range is where you're going to get all that resistance from here and here. And we broke out. So basically I'm fine. I'm, you know, playing a little bit of it, because you basically have it set up like you broke out from here. Now, yes, you have resistance here. So at the 14, you have some resistance. And then the next resistance is going to be, see this point? Somewhere in this range, 18. So now you're buying it 11 and 12, and you know you have 2 points on 12. That's pretty reasonable. That's 2 on 12 is reasonable, and then you have potential to get to 18 before you start really hitting this big resistance coming back from over here. So I like that. So I got some of that. So that's why I'm like, hey, that's kind of cool. And so once again, like my thing is like I'm this retirement guy. So I just like, it's literally like 5% of my portfolio. I'm just trying to just trade just really for the fun of it. Like one thing I want is I want to try not to lose money. I'm happy to not make money on it, but I don't want to lose money on it because I don't want to take my, you know, performance of the overall thing down. Okay. And then ARK ETF. Now this is one of these ones that I had, you know, I was, you know, I've been looking at before, and, you know, you had the downtrend and it broke. And so I have some of this too. And I kind of got faked out in this region here, you know, mistake. This was good. And then, you know, now it broke the downtrend line and it kind of had consolidated here. And so I had sold some and I really shouldn't have. I had bought some, which I think was fine, but then I sold it too quickly. And now I went back in. So I just have something in it. And now it's like breaking. This is very common for this consolidate, you know, to get some kind of like whipsaw as it breaks out. You know, it broke out of the downtrend. Now it's broke above the 50. And now it's kind of like you're setting up for, you know, you can imagine that, you know, a golden cross is coming here. This solid red line. I know it's hard to see, in the orange dotted line. If this keeps working its way, you know, they're going to cross. You're going to get the golden cross, the 50 cross the 200. That's kind of the direction that, you know, potential there. So I'm going to try to do, like, let's let that do its thing. And then I just want to note Tesla too. You know, Tesla as well. I don't have this. I'm not playing this one. But if you, you know, you look at it. Let's go here. Let's just do this. You know, yeah, similar setup for this thing. Oh no, I did buy some of this. Yeah, no, I did buy a little of this. Yeah, and same kind of setup. You know, see, that's interesting. Like I was talking about in that other chart, how we had a you know, ascending triangle, where it's a situation where ascending triangle where you have like a line and then it's progressing up. So this is the ascending triangle. And it basically, because the lows are getting higher, it's pressing up against a resistance line. Well, this is sort of the opposite. This is now a descending triangle. You see how you have your lower highs, and then you have this, you know, consistent lows here. But it's irrelevant to that. It's still a trend, right? You still had a downtrend that it broke. And you can still see that you have you have the smaller pattern within the larger pattern. The smaller pattern is low, higher low, sort of higher lows, and you can kind of see that it maybe had a little bit of a compression within that. So you gotta, it's like fractal in nature. It's like you have patterns within patterns within patterns. So in the short term, you had this ascending triangle within a, looks to be something like a descending triangle. And so it popped out. Now, you know, it did have a bad day on, you know, it did have a bad day on Friday. So, you know, maybe that's all it has. And maybe that's part of the issue, is that you had this kind of bullish pattern within a larger negative pattern. And so maybe the larger negative pattern is going to win out. You know, I don't know, but I have a little bit on it, just gambling with it. It's like, okay. And the reason is because, look, once again, all these like EV plays, like they're just, you know, they just, they were really beat up a while ago. And so they really came back. So I think that's it with this one. So it just, you know, in the big picture, everything seems kind of cool. It's just fine. They, you know, with the reverse repos, that seems to be fine. You know, if you listen to the Gammon videos and stuff, I mean, it's not really, it's just, there's so much cash out there. You can imagine that what happens with a bank is that they have, you know, you get all these deposits and they're liabilities of the bank. And, you know, so obviously liabilities, you know, if the government's giving money out, or, you know, better benefits in terms of like unemployment benefits, blah, 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 all this cash. And then people saving too, because this whole thing that happened with the cerveza sickness, people, like at least a decent amount of people are like, I need to save some money, because like, holy crap, you know, like, wow, I you know, if you were okay, you dodged a bullet. If you weren't okay, you're on the street. You know, a lot of people are in that situation. So I think a lot of people are saving. So the problem is that's a liability for the banks. And you can listen to all those Gammon and all those experts on it. But the point is that, you know, too much cash is probably not a big problem. Like the opposite, see, reverse repo, and it seemed to be an issue, like too much cash floating around. They don't like it, and it violates some of the rules for the banks, but they just, that's fine. They can just reverse repo it. And it seems like the Fed has enough treasuries to do that for a while. Repo, the regular repo, is more of a problem, because it's like that becomes more of a problem, because a repo is like a bank needs a treasury or something like that to put up to get cash. That means they need the cash, and a bank needing cash is never a good thing. But that's not the case here. The banks have too much cash. They don't like it. They have regulatory problems. They get penalized for it, so they don't like it. But it's not like, oh, you're on the verge of the Lehman moment or whatever. Who knows? I can't say. The plumbing is too complicated, but it's on the surface that doesn't seem to be the case. Well, so I think that's it for this one. So have a good weekend. Talk to you later. Bye.